This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on October 21st, 2011. Our time is 8:44 in the morning Mountain, 10:44 Eastern. Our radio show runs on AM 640 in Toronto, 630 CHED in Edmonton. Programming note, next week in Edmonton, we will be on at 3:30 instead of 3 o'clock. We will be on at 3:30, so make that programming note. If you ever miss a radio show, you can catch us on Harold's website, HESradio.com, HESradio.com. This week, we saw the metals drift lower, and then today, we're seeing a major move up. It was interesting. In our newsletter, you'll see this. If you'd like to get our newsletter, call us at 1-866-623-2002 or go to wwpmc.com and sign up. We have this in the newsletter from a London trader. China bought massive amounts of gold yesterday, October the 20th. A trader out of London told King World News the price discount in gold is the most welcome thing to the entire Eastern Hemisphere. The Chinese are buying very relentlessly because they know what is going to happen. We had a major physical buy order today. The Chinese bought a massive amount of physical today at the lows. There are major buy orders in that did not get triggered yet, and they set between 1585 and 1605, and we're talking about massive tonnage. That, according to King World News, their source, a London trader, obviously out of the UK. And Harold, when people are seeing these pullbacks, they are taking advantage of getting into the market and adding to their precious metals positions or starting one for the first time.
You better believe it. And the reason for that is that gold came down to its 150-day moving average and hit 1603 on Thursday, and that was a heavy support level for the market. It hit 1603, and now as of Friday, as we're trading, the market's back up to 1650. So the market has been extremely choppy. And it's been boring. Let's face it, we only like it when the market goes up. But the fact is that the market, after it fell from 1900 to 1600, basically it had to rebuild a base again, and that's what it's doing at this point. There's very heavy support at 1603. We hit that price on Thursday. The market's back up to 1650 and looking very strong. Again, there's no doubt in my mind that we're going to see not only a retest of the $1,900 level, which we could actually see this year, we will break 2,000, and then we'll go on substantially from there. The silver market came back and hit $30, also its 150-day moving average. It's back up right now to $31.60, and the silver market's also building a base. Oil's back up to $88. If we get above 90, where there is resistance, we could get back up into the triple digits in the oil market. I've always been very bullish on oil and still believe that we're going to retest eventually within the next couple of years that 150 level that we saw back in 2008. The U.S. dollar is now starting to fall back. A couple of weeks ago, we were concerned as it hit the 80-cent level as the sovereign debt situations in Europe got worse and worse. However, things are seeming to get a little bit better in Europe, and at this point, the U.S. dollar is falling as the euro is starting to make substantial moves back up to the upside. In actual fact, we've got the euro back up to 139. We know that 140 is a very important number. If we break back above the 140 level, we could see a rally literally in the euro back up to 150. That could push the dollar, the U.S. dollar, back down to around that 73.5-cent level. And again, I am anticipating that we will see the U.S. dollar come back down eventually to 71.50, where there is very heavy support. And once that price is broken, which I'm very confident it will be, we will see the U.S. dollar plummet as we will see the gold and silver markets continue to skyrocket based on a weak U.S. dollar. You've also got the Canadian dollar back up to 99 cents. Over the past few weeks, it got hurt when the U.S. dollar did get back up to 80. But again, in my opinion, there is no chance that the U.S. dollar is going to be the safe currency. The U.S. dollar is just way too weak. There's just way too many dollars out there, and we know that the Federal Reserve just keeps on printing and printing and printing U.S. dollars, and that will be the destruction of the U.S. dollar eventually. Now, the fact is that there's so much frustration going on in the world at this particular point. You've seen what's happening in Europe and in Asia. Europe, mostly in Greece and London. It started off with again, demonstrations. Now it's actually resulting in in demonstrations and rioting in the streets, and people are just getting so desperate. And now you've got that situation in the United States with the Wall Street people. I really don't know what in the world they anticipate or think could possibly happen from this, but that situation is gaining legs. And the fact is, it's in almost 50 different cities within the United States, and it's spreading to other countries throughout the world. At this point here, it seems to be a bit on the peaceful side, but as people get more and more frustrated, which is happening worldwide, that thing could really start to be turned from demonstrations into rioting. And again, that's the last thing in the world they need in the United States at this point. It's just that people are feeling so frustrated with their lives at this point, with the fact that there's no jobs, that the real estate markets have plummeted, that they have no money, and the fact is that things just continue to get worse and worse. In the newsletter this week, there's a lot of phenomenal articles, and again, a lot of them are quite concerning, because as people are getting more and more desperate, the news keeps on getting worse and worse. There's a long, steep drop for American standard of living. Life is not good in the United States because the fact is that people don't have the money. There's no jobs available. The fact is the stock markets are unstable. And the fact is, and I think this is the major reason why the U.S. will not recover from this situation for at least 5 to 10 years, is because of the real estate market. Because the real estate market is where most of the wealth is. Most people that buy homes when they're younger, when they're just getting married and having a family, you buy a home in the $200,000 range and you live in that home and you raise your family, and over time that house increases in value. They go up 5, 6, 7% a year, and over a 20, 30-year period, a $200,000 home gets up to $400,000 to $500,000, and that's where most people's wealth is. And then as they get older and their kids move out of the home, that's when people look to retire and sell off their home and take the money out of there and downsize. But that can't happen anymore, because the price of real estate has plummeted to such a huge level that nobody has any equity in their homes anymore. And that's why the Americans are feeling so poor at this point, because they've lost all of their money, and there's nothing in the horizon that is bullish for them, that they see any sign of light. So again, the situations are getting more and more dire, and there's so many reports coming out in so many different areas that it becomes so confusing. And the confusion is really getting to people because they really can't understand what's going on. So for that particular reason, and because I do believe that 2012 is really going to be the start of one of the worst times that we've seen in financial history, and going on from there, I've decided to come up to Edmonton on November the 28th to do a seminar for my Canadian clients up in Edmonton. Basically, it's going to be at the Fantasyland Hotel out by the West Edmonton Mall. I'm going to be flying all the way up from 80-degree sunny Florida all the way up to North Edmonton to come and see my friends and clients and listeners to this radio show. It's that important that we come up there and explain to you what's really happening and what we foresee happening over the next 5 to 10 years. As I've said on many of the radio shows, the next 5 years are going to be the most extreme years that we've ever seen, and if we don't have our ducks in a row, if we don't have our game plan down pat, we're going to be the same as most other people and be in financial trouble. And that's the last thing in the world that we want to see. We've done this radio show for 10 years and given very strong advice, and many of our listeners have done extremely well over the past 10 years, and we want that to continue. So this is going to be a free seminar. I don't want anybody paying to come to see me. So it's going to be on November the 28th. It's going to be at 6:30 in the evening, Mountain Time. It's going to be at the Fantasyland Hotel at the West Edmonton Mall. I'll be arriving on Monday, and we'll be holding this seminar, and again, it's a free seminar. If you want tickets, and everybody must have tickets, you can go to HES Radio, my personal website, HESradio.com, and there's a form that you can sign up there. Again, the tickets are free. If you want to bring friends, please bring them. Again, this is a very, very important seminar. The next 5 years are going to be extreme, starting in 2012. And again, it's extremely important that we sit down and discuss what's going to happen in the markets and how we protect ourselves against the onslaught of things that are going to happen. So again, go to HESradio.com. There's a form there that you can sign up. The tickets are free. You can have as many tickets as you want. We anticipate a very large turnout. I don't want people paying to come to see me. So it's going to be Randy Marshall and myself which I'm very, very excited about. On top of that, the people from Worldwide Precious Metals will be coming. And then we have very, very interesting news and a phenomenal presentation from Argyle on pink diamonds and the state of the diamond market. So it's going to be a sensational seminar. Again, I'm coming up there to meet my friends and listeners and clients, and I'm very much looking forward to it. So again, it's going to be on November the 28th. It's going to be on a Monday evening at 6:30. And it's going to be a phenomenal seminar that you're going to come out of there with a clear understanding, or a much clearer understanding, as to what's happening at this particular point and what's going to happen going forward. And again, I'm very much looking forward to coming up there and seeing all my friends and clients and listeners to the radio show. You've been so loyal to me and Randy over the last 10 years. Again, it's about time I came back up and saw my friends. For all of our friends and listeners in Toronto, we will be doing a seminar after that, and I will announce the date that we will be coming to Toronto. So, again, I'm very excited to do this. It's very, very important that we get together, and again, it's going to be a free seminar. So go to HESradio.com, and you can sign up for your tickets free of charge, and it'll be a pleasure to meet everybody, and again, I'm looking forward to it. All in all, no matter how confusing these markets are, the one thing that you really need to concentrate on is inflation. And that's the major reason why we've recommended the hard asset markets to you. Gold, silver, diamonds are the three major areas that you will be able to preserve equity, fight inflation, and actually make money over the next 5 to 10 years. And if you don't think inflation is here, it certainly is. Just look what's happening in China. Their inflation rate is over 6% right now, and that's happened over the last year. The fact is that in the United States and in Canada and in other areas of the world, inflation is starting to skyrocket as food prices are skyrocketing and the oil's back up to almost $90. So the fact is that no matter how confusing everything is, what's happening in Europe with the banks, with sovereign debt and all these other situations, the one thing that we need to concentrate on is that with inflation comes higher hard asset prices, gold, silver, and diamonds. And that's where most of the money is going to be made. I'm not necessarily calling for a crash in the stock market this year. October is a year where the stock markets have notoriously crashed before. I don't think that's going to happen. I think that we could see some serious situations going into 2012 in the stock markets around the world because of certain situations that we'll discuss. But the bottom line is that you really need to be in the hard asset markets right now. Gold has gone from $250 to $1,900 because of the reasons that we've talked about. But inflation is the number one reason why gold and silver will continue to climb. The other scenario is that as the U.S. continues to print more and more money, and as they continue to print more and more money in Europe to try to solve the sovereign debt situation, it weakens the currency markets, means that your dollar buys less and less. And as food prices and oil prices are going higher and your dollar is buying less and less, that's where the inflationary problems are, and that's why we're probably looking at $150 to $200 silver down the road, and we're probably looking at gold in excess of $5,000 to $7,000 to $8,000. Again, we're going to come into some very, very difficult times. 2012 could turn out to be one of the most frightening financial years we've seen, and again, we're going to address that at the seminar and to continue to address it on the radio show. Get the newsletter this week. Randy did a phenomenal job again. It's loaded with information, the information you need to make an intelligent business decision.
The telephone number to invest in precious metals, 1-866-623-2002, 1-866-623-2002. There's only one company that Harold recommends you use when it comes to investing in precious metals, Worldwide Precious Metals. Their website, wwpmc.com, wwpmc.com. The telephone number, 1-866-623-2002. As we mentioned off the top of the show, London Trader coming out and saying yesterday the Chinese have purchased a massive amount of gold. And that is one of the things that I think people have to wrap their head around. When the market goes down, it's an opportunity for you to add to your position or start a position. Buy when others are selling. And obviously, when everyone's buying, you may want to take a look at taking some profits. One of the stories that caught my attention this week, it's from Bloomberg. Morgan Stanley came out and said that gold will perform best. It's going to be very resilient. It's going to surge to a record next year. And they actually said that their 2012 forecast for bullion was an increase of 35%. they can see next year $2,200 an ounce gold, and best case scenario next year, $2,464. That according to their analysts. As well, Bloomberg had a story this week about gold traders being the most bullish on precious metals since July after the pullback in both gold and silver. Gold to top $1,800 an ounce by November, according to FX Concepts. John Taylor, he's the founder of FX Concepts. They're the world's largest currency hedge fund, and he sees that we may reach $1,750 to $1,800 an ounce by late November. Also, CityFX, gold could test $1,500 an ounce, but then bounce to trade as high as $3,400. A mixed forecast for gold from the technical research arm of Citigroup reckons gold could fall below $1,400 an ounce short term before recovering to much higher levels. They're actually saying that we could see $3,400 an ounce gold. It was interesting this week. This was from King World News. Kevin Wides is actually writing this article, and it was on King World News. Is silver the next Apple? And this is a must-read article. I would tell you, give us a call, 1-866-623-2002, or go to the website, www.pmc.com. Sign up for our free weekly newsletter. The following information, they say in this article, is put together for King World News by Kevin Wides out of Switzerland. It's a fascinating comparison between the bull move in Apple shares and silver bullion. Kevin stated, with everyone talking about Steve Jobs passing away and the wonderful investment Apple shares have been, a closer look shows how hard it has been to catch a trend over the long run. And I still believe in the silver story. And once you take a look at this long-term situation of the entire bull market of precious metals, silver, you'll see there's a correlation between Apple shares and silver. In the article, Harold, they actually go through and show that silver has had some major pullbacks, as was the case with Apple. But those that had a strong belief in, obviously, Apple and a strong belief in silver have done very, very well over the long term. In fact, John Embry was asked about it. He says, when asked about silver, I think the comparison between silver and shares of Apple is excellent in the sense that silver volatility has been horrific. All but the true believers been knocked out of the box for sure, but I believe in the fullness of time, silver from the bottom may post a better return than Apple, and that's really saying something because silver, or rather Apple, has been fantastic. Obviously, silver has been fantastic at times, although, Harold, we have seen our pullbacks in this market. So I think that's the mindset people have to start really starting to come around to, and that is when we get the pullbacks, this is an opportunity. Obviously everyone, as you've said many years ago, everyone wants to buy when it's racing up. Everyone wants to buy when everyone else is buying, but the mentality should be adding to your position, starting a position when we see the days of the pullbacks.
You better believe it. And again, silver has been a very volatile market, as has gold, but so has many other different commodities. So the fact is that the smart way to play it is the way that we've always said, just own it physically, own the actual metal, and those big price swings don't affect you. So the fact is that volatility in the market is what's going to bring the price of silver eventually to $100 to $200. It's not a steady climb type of market. It's never, ever been that type of market. In fact, if you look at the charts back in 1979 and 80, you'll see silver go pretty well straight up. But the fact is that there's always corrections in the market, and if you look at a short-term chart in silver, those corrections in the market are extreme. But if you look at it on a long-term basis, like you look at silver, for example, back from 1972 up to 1980, those pullbacks are insignificant. So the fact is that if you're going to capture the full move that silver is going to make, you need to do what we've always said to do: own the actual metal physically, own it outright. And the fact is that silver going from $17 up to 50, back down to 26, and back up to 60 or 70. If you're heavily leveraged, you're going to be knocked out of the market. We say that every single week. The fact is, if you own the metal physically, those pullbacks only become buying opportunities. So if you are going to leverage the markets, make certain that you have money put aside to meet margin calls. If you don't, you should own the actual physical metal, and then there shouldn't be an issue because, again, we've always said we want to be in this market for the long term. 10 years ago, we said we were going to be in this market for at least 10 years, and we have been. Now, by far, I think the best is yet to come. When you get these type of pullbacks, unless the market situation has changed, which we're certainly going to alert you to, that isn't even close to the case. We haven't even gotten into the inflationary phase for gold and silver, which is going to be the biggest phase of all the moves that is coming in silver. So again, the move from $4 to $50 obviously was an extreme move, but I really don't believe it's anywhere near what's going to happen over the next 4 to 5 years. So again, if you're going to trade this market or own the hard asset market, you want to own them outright so you're not susceptible to heavy downturns and margin calls. But all in all, it's the volatility that's going to bring silver up to $150 to $200.
Our radio show runs on 630 CHED in Edmonton, AM 640 in Toronto. For those in Edmonton, next week our show will be on at 3:30. Keep that in mind. Normally we're on at 3 o'clock. We'll be on at 3:30. Remember, if you ever miss a show, you can catch us on HESradio.com, HESradio.com. Go there and sign up for Herald Seminar coming up in Edmonton, November the 28th, Fantasyland Hotel, right at West Edmonton Mall. It's at 6:30. You can go and sign up at HESradio.com. To invest in precious metals, the telephone number, 1-866-623-2002, 1-866-623-2002. The website is www.pmc.com. If you'd like to receive our free weekly newsletter, we'll be more than happy to send it out to you via email every week, free of charge. Some of the stories we found this week, beyond the metals, the U.S. Misery Index rises to its highest since 1983. An unofficial gauge of human misery in the United States rose last month to a 28-year high as Americans struggle with rising inflation and high unemployment. Also, consumers are the most negative since the recession began. Consumer confidence in the United States has slumped in October to the lowest level since the recession began, showing that people are obviously not optimistic about where things are headed. I was just reading this morning, actually, on the Drudge Report that Steve Jobs met with the U.S. President Barack Obama and said, you are going to be a one-term president if things do not change. That article that Harold touched on, it's in the newsletter, a long, steep drop for American standard of living. The average individual now has $1,315 less in disposable income than he or she did 3 years ago. At the onset of the Great Recession, even though the recession, quote-unquote, has ended, they say, technically speaking, in the mid-'90s, that means less money to spend at the spa, the movies, vacations, carpeting for the house, or dinner at a restaurant. Now, Boston Fed president, his name is Eric Rosengren, came out and said that QE3 is certainly a possibility if things get bad enough. And this weekend, the EU is meeting, possibly to meet again next week, and they're talking about putting together a $1.3 trillion fund to rescue the EU. And according to Mervyn King, who's the head of the Bank of England, he says time is running out to solve the world economic crisis, so there is a sense of urgency. To invest in precious metals, the telephone number 1-866-623-2002, the website www.pmc.com. We're going to come back and talk about a great week for yellow diamonds in general, as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on October 21st, 2011. Our time is 9:13 in the morning. That is Mountain, 11:13 Eastern. Radio show runs on AM 640 in Toronto, 630 CHED in Edmonton. If you ever miss a radio show, catch us at HESradio.com. Next week in Edmonton, we will be on at 3:30. Keep that in mind. We'll be on at 3:30. Featured Diamond of the Week. Harold's website is rarecoloreddiamonds.com. He'll be talking about diamonds when he comes to Edmonton. Rarecoloreddiamonds.com, featured diamond of the week. It's a beautiful 3-carat oval fancy yellow, internally flawless. Only one diamond in 15 million is 3 carats, and very few are flawless with such a strong color. And as we saw this week at Christie's New York auction, and we will talk about it, large yellow diamonds are selling for strong prices. This is a diamond to add to your diamond portfolio collection today. And Christie's had their New York Magnificent Jewel Sale on October the 18th, 2011 at Rockefeller Plaza in New York City. The top lot was lot 334, a pear-shaped, fancy, vivid yellow diamond. It weighed approximately 32.77 carats. The estimate on it, around $6 million, went for 6.5, close to $6.6 million. And Harold, if you go through all the auction results, and we can send them out to all the people that are listening, we can send them out. Give Harold a call at 1-800-432-1022 or go to his website, rarecoloreddiamonds.com. We can send the auction results out. But the yellow diamonds seem to be featured in this auction, and they all did very, very well.
You better believe it. I'm so pleased about it, too, because, again, with everything happening in the world financially, just look at what diamonds are doing. They're skyrocketing in price. So, again, I'm very, very pleased. And, again, as Randy said, we will talk a lot about this. I've got an amazing presentation from Argyle coming up to do at the seminar. So there's a lot of changes happening there. Let me say that all of my clients that do own Argyle pink diamonds are in store for a huge payoff, because with what's happening with Argyle and the amount of diamonds coming out of the mine, they're all of a sudden becoming much, much smaller. If you've got an Argyle diamond that's 1/3 of a carat or 1/2 a carat, you've got a very large Argyle diamond, because most of the diamonds that are coming out of the mine right now are smaller than that and are going up tremendously in price. I know last year clients of mine bought vivid pink Argyles that were about 1/3 of a carat, that were in the $50,000 range, and now the vivid Argyles that are under .20s are $50,000. So they almost doubled from last year. That's how much these diamonds are going up. And again, I'm ecstatic to be coming up to Edmonton to do this seminar, not only on the world economy and everything that's happening and bring you up to date as to what I think is going to happen, but the presentation on the diamonds is going to be the most exciting that you've ever seen. We're also on the verge of kicking off our auction website, which should come up in the first or second week of November, and we've got some amazing diamonds, emeralds, rubies, and sapphires, and gold and silver pieces that are going to be sold at auction at our very first auction, and that's really going to be restricted to the listeners and clients of our radio show, so I'm very, very excited about that. The great news is what happened at this auction this week. Let me just go over a few of the things. That 32-carat big vivid yellow that sold, it was supposed to sell at around $6 million. It sold for $6.5 million. But there was other diamonds that sold. And again, looking at the world economy, as terrible as it is, as frightened as most people are about what to do, let me just show you what's happening when you own rare colored diamonds. There was a ring that was set in a pear-shaped fancy purplish pink diamond weighing approximately 8 carats. They anticipated that the diamond would sell for between $1,250 and $1,800. It sold for $1.25 to $1.8 million, and it sold for over $2 million. There was a fancy yellow diamond that was supposed to sell in the $400,000 range. It sold at $482,500. There was a vivid yellow diamond ring that was supposed to sell for $250,000. It sold for $362,500. There was a bracelet that was supposed to sell for $100,000. It sold for $194,500, almost double what it was supposed to sell for. There was a fancy yellow diamond ring that was supposed to sell for $70,000 to $100,000. Listen to this. It sold for $194,500. All of these prices are in the newsletter. Get the newsletter this week, because this is exactly what I've been telling you and recommending to you, is the fact that these diamonds are now starting to take on a life of their own. And over the next 5 to 10 years, the price of our diamonds will continue to skyrocket. The yellow flawless diamonds normally double in price every 4 years. If you start to get into the larger yellow diamonds, the 2, 3, 4, 5 carat diamonds, those diamonds are taking off like crazy. They're going for fortunes at auction, and we're one of the only companies in the world that has these diamonds. I have a cutter that works exclusively for me that cuts 80% of the world's flawless diamonds, and those are the diamonds that my clients are getting. Now, there are other companies out there that tend to try to imitate what we do, and they do have some yellow flawless diamonds. In most cases, if you were to take a pile of yellow flawless diamonds and put 100 diamonds together, you would be able to pick my diamonds out of that lot. And you'd also be able to pick out some of these other diamonds, because even though a diamond may be fancy yellow or fancy intense yellow or even fancy vivid yellow, and even though it's internally flawless, it doesn't mean that it's a magnificent diamond. It means that it falls within the criteria that the Gemological Institute of America is looking for. But all of my yellow diamonds are 8s, 9s, and 10s out of 10. We do not deal in anything under that, where most of those other diamonds that are lesser quality goes to really our competitors. The fact is that these yellow flawless diamonds not only do extremely well under normal circumstance, but during times of high inflation, these are the diamonds that went up 500% in 1979 and 80. We believe we're going to see a repeat of that within the next 5 years. So a diamond that you can buy today, a fancy yellow, fancy intense, fancy vivid yellow flawless, let's say you bought a diamond for $20,000, in 5 years from now that diamond could be $100,000. It happened in 79 and 80, and we believe the inflationary numbers that are coming are going to be much more severe than what we saw back in the late 70s, early 80s. So while you can still get them, and there is not a lot of these diamonds available, you want to invest in yellow flawless diamonds. Our diamonds are over a carat. We have diamonds that are in the 2, 3, 4, 5 carat level. I've got a 14 carat flawless. I've got a 22 carat flawless. These diamonds just absolutely sell for fortunes at auction. And obviously, you know, the big news is these two major vivid yellow diamonds that are selling. And none of those two diamonds are flawless, by the way. All of my diamonds are flawless. The other diamonds that you definitely want to invest in while you can still get them are the Argyle pinks. These are smaller diamonds. The largest diamond that came out of the mine was 2 carats. Most of the diamonds that come out of the mine are under a quarter of a carat, and they're getting smaller. But these diamonds keep on going up and up and up in price because they're so beautiful and they're so valuable. But the fact is that there's very, very few of them available. I bought out the last 2 quarters of production from Argyle, and what I've noticed is that the diamonds are starting to change. This is very bullish for all of us that own these diamonds, and again, you probably have 2 to 3 years to continue to buy Argyles before there's hardly any of them left. And I'm starting to see that the norm is now the smaller diamonds, under a quarter of a carat. So if you own an Argyle pink diamond that's a .33 or a .35 or a .50, you've got what is considered a very large Argyle diamond, because the diamonds are getting smaller and smaller. The colors are still amazing, but what we're starting to see is that some brown is starting to creep into the mine. That means that the pinks are now starting to turn out to be pinkish browns. So the fact is that what I invested in was the highest quality Argyle pinks, the vivids, the intenses, and the fancy pinks, and I've got enough of those available for my clients. In actual fact, we're going to display a lot of these new diamonds because they're just coming out of GIA at the seminar that we're going to do in Edmonton on November the 18th. So make certain that you sign up for that. In actual fact, it's going to be on Monday, November the 28th at 6:30 p.m. at the West Edmonton Mall at the Fantasyland Hotel. There's going to be Randy Marshall and myself. There's going to be our friends from Worldwide Precious Metals and myself doing a presentation on Argyle, and you're going to see one of the most amazing presentations you've ever seen. We're also going to show you our auction site, and we're going to show you a new presentation on diamonds. I've never been more excited about what's happening in the diamond market. I brought this market to you 6 years ago when nobody even mentioned colored diamonds, and now it's one of the most popular investments you can get. However, I've been in the investment business for 35 years, and nobody has the contacts in the business that I do. I sell more than half of the pink diamonds for Argyle that are sold in the world, and most of those are sitting in Canada with my Canadian clients. So the thing is that I'll be coming up to Edmonton to do this seminar on November the 28th. I'm going to stick around for all of Tuesday. So you can literally go on HESradio.com, HESradio.com, my private website, where you can listen to our radio shows, and you can sign up for the seminar. It's totally free of charge. I don't want anybody paying to come to see me speak. This is a free seminar. The economy is tight, and I don't want people paying to come to see us. However, I will be setting up appointments every hour starting at 8:30. Now, I've only got the one day on Tuesday to be there, so it's on a first-come, first-served basis. You can literally go on HESradio.com, get your free tickets for the seminar, and if you would like a private meeting with me to talk about diamonds and investing in diamonds for your personal portfolio, you can set up an appointment at this point. I would imagine that these appointments will fill up very, very quickly. So again, I do want to make it a point that if you do want to meet with me personally, you have the opportunity to have an hour of my time totally free of charge, and all you have to do is go to the website, HESradio.com, fill out the application, tell us how many free tickets you would like for the seminar, and if you would like a private meeting with me to talk about investing in diamonds, you can have one of the hour slots. It'll be from 8:30 till about 4:30 in the afternoon. So again, I'm very much looking forward to meeting all of my listeners, friends, clients. Again, I'm coming all the way up from South Florida to meet you. Again, I'd like to be able to do and help you on that Tuesday. And for those that we don't get to meet on that Tuesday, we will be able to contact you and show you all of our diamonds. Now, I will have Argyle diamonds starting at $20,000. Again, I'll have Argyle pink diamonds starting at $20,000 and going up from there. So most people that visit the website and attend the seminar are going to be able to invest in these amazing pink diamonds and yellow flawless diamonds, and that's where I see the future. I see major money being made over the next 5 to 10 years in yellow flawless and Argyle pink diamonds. And again, we're going to come up to Canada, to Edmonton, to explain all this to you and do a phenomenal seminar.
Harold, there's one diamond I wanted to mention. It really caught my attention. It was lot 27 of this Christie's New York Magnificent Jewel Sale, which was taking place on Tuesday. It was a brooch, and it was a fancy yellow briolette cut diamond, 60 carats. The estimate on it was $250. It went for $578,500. Wow. And there was another one, lot 147. It was a modified oval-cut fancy pink diamond. The carat was 5.23. The estimate $600,000. It went for $932,500. So Harold has a featured diamond this week, and you can see the auction results and how well the yellows did. He has a 3-carat oval fancy yellow internally flawless, and it would be an opportunity for you to add to your portfolio of diamonds or start your portfolio collection today by investing in this 3-carat diamond. Harold, it is a stunning diamond, and people can get a hold of you via rarecoloreddiamonds.com or calling 1-800-432-1022. But this is a stunner, to say the least.
Oh, you bet. And, you know, the thing is, to get a 3-carat diamond today is nearly impossible of this quality and color, because only one diamond in 15 million is over 3 carats. And the fact is that how many of those will be this beautiful yellow, and how many of them are internally flawless. So, again, the auction results tell the whole story. These are assets that people have bought, have enjoyed, have worn for many years, and then take it to auction and make a huge profit on it. That's why H. Siegel Fine Auctions is coming onto line within the first part of November. And again, I'm extremely excited. I've worked on this for 2 years. I built this specifically for my clients to sell their diamonds down the road. Obviously, very, very few clients are selling diamonds at this particular point. The next 5 to 10 years are going to be where we're going to make all of our money. However, when you do see the auction coming up in early November, and again, I'll talk more about it next week, I've got rubies, emeralds, and sapphires. I've got Argyle pink diamonds coming up for auction. I've got some gold and silver sets that I put away since 2000. We've got some of the most amazing high-end collectibles that are going to go for auction coming up in November. And again, we're the only company in the world that has this. Nobody has an online live auction, and nobody has the products that we're going to be able to offer to our clients at phenomenal prices. So I'm extremely excited, Randy. You know, when you publish the auction results from this week, I had to read them 4 or 5 times. Again, I'm up on everything that's happening in diamonds, but this just tells our listeners that everything that we've said to them over the years is happening right in front of their very eyes. And again, I couldn't be more pleased and proud of our Canadian clients that own the yellow flawless and Argyle pink diamonds. All of those diamonds are put away in Canada in safety deposit boxes, and when the time comes to sell them, we're going to sell them at auction for all of our clients.
And we mentioned last week there is another auction coming up. Sotheby's having a sale in Geneva. Magnificent Jewels, November the 15th. And that monster of a yellow diamond, the Sun Drop Diamond, 110 carats, VVS1, Fancy Vivid Yellow Diamond, will go on sale. It's actually spent a little time at London's Natural History Museum. The estimate on it, 11 to 15 million. To give you an idea of what happened at the New York Magnificent Jewel Sale from Christie's Tuesday, here's one more. Lot 183, a ring set with a circular cut Fancy Intense diamond. It was 5 carats, and it was lot 183. The estimate on it was $60,000. It went for $134,500. We'll send the auction results to you. Harold will be happy to do that. Connect with him at rarecoloreddiamonds.com, rarecoloreddiamonds.com. He'll be more than happy to speak to you at 1-800-432-1022, 1-800-432-1022, and go to his website, hesradio.com. Sign up for his free seminar November the 28th at the Fantasyland Hotel here in Edmonton at 6:30. Looking forward to being a part of that and hoping that the Packers don't play on Monday Night Football. Although I can always tape it. I can always tape it. To invest in precious metals, the telephone number 1-866-623-2002, 1-866-623-2002. The website to connect with Worldwide Precious Metals. The only company Harold recommends that you deal with when it comes to investing in precious metals. Their website, wwpmc.com, telephone number 1-866-623-2002. One of the stories that came out this week, and these are the things we need to be paying attention to and watching. Bloomberg had this as a chart of the week. Also, ZeroHedge.com had a story on it as well. America's bills are about to exceed its paycheck. The chart shows, and you'll see it in our newsletter, the United States government debt divided among every man, woman, and child will exceed per capita gross domestic product this year. And they're saying it will be around Halloween, ironically, for the first time in the IMF fund's records dating back to 1980. The amount owed will be $46,771 per person, surpassing the $46,750 in output, according to Bloomberg's calculations using the IMF's deficit and growth projections from its September World Economic Outlook. Debt will exceed production by $8,000 per person by 2016. Reversing GDP's 18,400 advantage as recently as 2007, before the world's largest economy fell into recession and the government spending surged. And according to Robert Bixby, he's the executive director of the Concord Coalition in Virginia, it's a milestone and it's unsustainable. It's an unsustainable trend. It's very, very alarming. In fact, for those that might have seen on, I believe it was Tuesday, they had the debate on CNN among the Republicans, and Ron Paul, a strong advocate for gold, he was a part of the debate. He's running for president, actually running for the nomination to be president on the Republican side, and he said the biggest thing that's threatening the United States is monetary policy, the Fed, the boom and bust cycles, but also the debt. The debt is going to kill the United States. The U.S. deficit for 2011 increased to $1.3 trillion in fiscal 2011. The U.S. government posted its third consecutive annual budget deficit in excess of $1 trillion. And, Harold, that's why we've been saying now is a time to have hard assets. The United States has some serious, serious financial problems.
Oh, you bet they do, and it's going to continue to get worse and worse. It's like a domino effect. You know, the unfortunate thing is that, you know, there's really no end in sight to this, because all they're doing is, as we always say, putting Band-Aids on open heart surgery. The fact is that the problems are so severe that there's just no easy answer to it. I know what I would do. I know that I would have bit the bullet a while ago, and I would have raised interest rates, and I would have dealt with, you know, with the issues over the shorter term. But now this is going to last for years and years and years. And again, the worse the situation gets, the more desperate people become and the more desperate the financial situation becomes. So, again, we all know, we've all had financial issues within our life. You know, in every household, you know, there's times when expenses exceed what you have coming in. And we know how we deal with that, and you know how stressed out you get, you know, when the bill collectors call and when you're not making your mortgage payment on time and, you know, that type of thing. Well, just, you know, what the U.S. is going through is that on steroids. They owe $15 trillion that they could never, ever, ever pay back. And that's a very frightening thing, because when you owe that type of money to the countries that they owe it to, China, Russia, those type of countries, it's not a good situation. Unfortunately, most of the time these financial debacles like the Great Depression and those type of financial issues, they end up in war. And the fact is that that's something that is talked about an awful lot. We don't like to talk about it on the show, but the major problem is in the Middle East. That's where the major problem is going to be. And the fact is that that could happen within the next year. So that could affect oil prices back up to $150, which is the last thing in the world we need at this particular point. You know, extremely high oil prices and food prices at a time when most people are not doing well financially is why inflation could possibly far surpass what we saw in 79 and 80 and hit levels that nobody has ever dreamed of. And the fact is that is more than likely going to happen because there's really no end in sight. And we know that the U.S. and the Federal Reserve is not going to raise interest rates. And if you don't raise interest rates, the U.S. dollar will not strengthen and inflation will just go crazy. I do believe the U.S. will get their act together. I do believe that they are going to eventually, probably 2 to 3 years from now, start to raise interest rates. And that will start to correct the situation, but it's going to be a very difficult and painful process because the interest rates will have to go up to 20%, in my opinion, or higher in order to solve what the problems are. And 20% interest rates will hurt the stock market, hurt the real estate market, and basically hurt the banks tremendously. But that's what has to be done in order to right the ship. And again, I think we're going to see that. And that will be your exit plan, by the way, for getting out of your gold and silver. Because even though the U.S. dollar does go up and they are going to raise interest rates eventually, they're going to have to raise it substantially in order for it to make a difference. And not till interest rates start to get to, 15, 18, 20% will we see it affect the gold and silver markets on the downside, and that will be our clue to get out of the market. Obviously, gold and silver are priced in U.S. dollars, and that's what I do believe is going to happen. We will get out of the gold and silver markets with a stronger U.S. dollar. It's probably going to be 5 years down the road.
James Turk came out this week and said, I expect gold to be over $2,000 before too long. If it doesn't happen in 2011, it will surely happen in 2012. He also said that he sees insolvency of the banks to cause a gold explosion. What we're seeing in the metals right now is the quiet before the storm. These are excellent times to be accumulating gold and silver on the dips because longer term, you're going to see price levels for the metals that today would be considered unimaginable. This is how secular bull markets work, and this one won't be any different. It will end in a mania that will light people's hair on fire, as Jim Sinclair is fond of saying. And Jim Sinclair really believes that we're just going through a period of consolidation right now regarding the metals. You can see a quote from him in our newsletter. If you'd like to invest in precious metals, the telephone number 1-866-623-2002, 1-866-623-2002, the website www.pmc.com, Harold's website for diamonds, rarecoloreddiamonds.com, the telephone number 1-800-432-1022, and obviously speak with Harold about getting the exciting auction results we had from New York this week and Christie's auction. Harold, we have about a minute left on the diamond side of things. What an exciting week when you see the auction result, in particular for yellow diamonds that we had. It's just really, really gratifying to see those numbers when obviously you've been an advocate of the yellows way before anyone else.
You bet, and again, I'm very proud of that, but then again, and I'm not bragging, how many people call gold at $250 and silver at $380? So, again, we've always done things different. We've always been different than any other analyst because, again, I've been through this. I've been through the inflationary markets of the 70s and 80s. I knew what to look for. And, again, I'm very, very proud of the listeners to our show and the people that stood up and took our advice, because those that are in the diamond market have done nothing but make money. The market looks phenomenal, and the next 5 to 10 years are going to be tremendous. Please come to the seminar. I'd love to see all of the listeners out there and shake your hands and say hi and talk. So I'm coming up there November the 28th to the Fantasyland Hotel. It's at 6:30. You can go on hesradio.com, sign up for free tickets. We want this to be a free seminar. We don't want you paying to come to see us.
Thank you very much, Harold Siegel.
My pleasure. I wish everybody a wonderful weekend and a very profitable day.
For those that listen in Edmonton, don't forget next week we will be on at 3:30 in Edmonton. And keep that in mind. Normally we're on Sunday at 3 o'clock. To invest in precious metals, there's only one company that Harold recommends you use. www.pmc.com, their website, Worldwide Precious Metals. The telephone number, 1-866-623-2002. Harold's website is rarecoloreddiamonds.com. The diamond telephone number, 1-800-432-1022. That's it. Another edition of the World Financial Report on radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.